Stock Talk listeners, welcome. Time for a focused deep dive today.
That's right.
We're getting into Airbnb's Q1 2025 numbers. The report just dropped May 1st.
Yep, hot off the press.
And our goal here is pretty simple. Pull out the key figures, the main insights you need on where they stand and where they might be heading.
Without drowning in jargon.
Exactly. Let's cut through it. So let's get started. Where do we begin? Top line.
Makes sense. Okay, so revenue for Q1 hit $2.3 billion.
$2.3 billion. And how's the growth looking there?
Well, it's up 6% compared to last year. But if you take out the currency effects, foreign exchange, it's actually closer to 8% growth.
Okay, 6 or 8%. Still solid growth. And I assume that comes from more people booking.
Yeah, exactly.
Yeah.
Nights and experiences booked, that metric jumped 8%. So 143.1 nights and experiences.
Wow, 143 million. And the total value of those bookings, the GBV.
Right. Gross booking value, that grew 7% to $24.5 billion. Or, again, excluding FX, that's 9% growth.
Okay, so people are booking more, spending a bit more overall. Now, I remember reading something about calendar effects, Easter and Leap Day.
Ah, yes. That's a really important point.
Yeah.
Q1 2024 had Easter and an extra day because of the leap year. That makes the comparison this year, well, tougher.
So the growth maybe looks a bit lower than it actually is.
Potentially, yeah.
Yeah.
Airbnb actually put a number on it. They estimate that without those timing differences, revenue growth would have been more like 11%.
Ah, okay, 11%. That paints a slightly stronger picture of the underlying business momentum, doesn't it?
It definitely does. It suggests things are moving maybe a bit faster than that headline 6% implies.
Right. So revenue, bookings up, underlying growth, maybe even stronger. What about the bottom line? Profitability.
Okay, here's where it gets a bit more mixed. Net income actually went down. It was $154 million this quarter.
Down from what?
Down from $264 million in Q1 last year. So the margin dropped from 12% to 7%.
A noticeable drop. And operating income, same story.
Pretty similar, yeah. Operating income was $38 million compared to $101 million a year ago.
Okay, so lower profits. What's behind that? Are costs just up?
It seems to be driven mainly by investment. They specifically called out spending more on product development.
That's probably for the summer release they mentioned, the May 13th one.
Exactly. They're pushing to expand their offerings, beyond places to stay, as they put it. So that costs money up front.
Makes sense. Any other drivers for the lower profit?
Yeah, they also mentioned higher stock-based compensation costs, basically paying employees with stock because they've hired more people. And there was some one-time write-downs on investments, too.
So a combination of strategic investment and some other cost factors. How did adjusted EBITDA look? Sometimes that gives a clearer view past these kinds of expenses.
Right. And adjusted EBITDA held up pretty well, actually. It came in at $417 million.
And the margin on that?
That's an 18% margin. It is slightly down from last year. That was $424 million and a 20% margin, but still quite strong considering the increased spending elsewhere.
Okay, so core operational profitability measured by adjusted EBITDA seems relatively stable despite the investments pulling down net income.
Got it. What about cash? How are they doing on cash flow?
Oh, cash generation is still a huge strength. They pulled in $1.8 billion in free cash flow just in Q1.
$1.8 billion. That's massive. What kind of margin is that?
It's a 78% margin on revenue for the quarter, which is, well, incredibly high. It was slightly higher last year at $1.9 billion, but still. $1.8 billion is a lot of cash.
A 78% free cash flow margin is definitely impressive. Are they putting that cash to work? Buybacks?
They are, yeah. They continued their share repurchase program, bought back about $807 million worth of their stock in Q1.
Okay, and that helps reduce the share count.
Yep. They said the fully diluted share count is down about 2.5% compared to last year because of these buybacks. Plus, they're sitting on a big pile of cash, $11.5 billion in cash and equivalents.
Wow. So strong financial position, strong cash flow, returning capital. Let's circle back to some operational details. Average daily rate ADR. What happened there? ADR was interesting. Overall, it was down slightly, about 1%, landing at $171.
Down. Does that mean pricing pressure?
Not necessarily, because if you strip out the foreign exchange impact, again, ADR was actually up 1% across all regions.
Oh, okay. So currency headwinds made it look down, but underlying pricing is actually holding up or even slightly increasing.
Seems like it, yeah. Driven mostly by price appreciation, they said. And another interesting metric, app usage keeps climbing.
Oh, yeah. How much?
58% of all nights booked came through the Airbnb app in Q1. That's up from 54% last year.
That's a pretty significant chunk coming via the app. shows engagement, I guess.
Definitely. People using the app are likely more sticky customers.
Okay, let's talk geography. Where's the growth really coming from? Any particular bright spots?
Latin America was the real standout this quarter. Nights and experiences booked grew in the low 20% range there.
Low 20s. That's very strong. Any specific country?
Brazil was specifically mentioned, up 27%. And maybe even more telling, first-time booker growth in Latin America overall was over 30%. That points to, a lot of future potential.
Absolutely. Getting new customers is key. What about other regions? Asia Pacific?
Asia Pacific also had solid growth, mid-teens percentage growth.
Yeah.
Japan saw domestic bookings jump over 20%, which is pretty significant.
Okay, strong international showing then. How did the more established markets do? North America and EMEA?
More moderate growth there. North America saw low single-digit growth. Most of the U.S. bookings are still domestic travel.
And EMEA? Europe, Middle East, Africa.
That was mid-single-digit growth. They noted continued price appreciation was a factor there, too.
So it really looks like the international expansion, particularly in LATAM and APAC, is paying off right now.
It certainly seems to be where the momentum is strongest.
Now, let's talk about that summer release again. May 13th, the focus is beyond places to stay. What does that really mean, do you think? What are they aiming for?
It sounds like a pretty significant strategic shift, or at least an expansion. They're investing heavily, as we saw in the costs, to build out, something more than just booking a room or a house.
Like integrating tours, activities, maybe even transport more deeply.
Could be. It feels like they want to own more of the travel journey, become a more comprehensive travel platform, not just an accommodation provider. It's a big ambition.
Definitely one to watch. And despite these big investments, they seem confident about profitability for the full year.
They do. Management reaffirmed their guidance for the full year 2025 adjusted EBITDA margin. They're still expecting it to be at least 34.5%.
Okay, so they expect the core business to remain very profitable even with the spending. And the outlook for next quarter, Q2.
For Q2, they're projecting revenue between roughly $2.99 billion and $3.05 billion.
Which translates to what kind of growth?
That's about 9% to 11% year-over-year growth. But remember, Q2 gets a bit of a boost from that Easter timing shift we talked about earlier. They estimate it adds about 2 percentage points to the Q2 growth rate.
Right, the flip side of the Q1 comparison difficulty. Okay, so looking at the whole picture then, what are the main takeaways for you? And maybe the risks?
Well, the key positives are clearly that strong international growth, especially LATAM and APAC. The increasing app usage is a good sign too. And they mentioned a focus on quality superhost bookings were up 15%, which suggests that's working.
And the potential downsides or risks to keep an eye on?
The obvious one is the cost of these new ventures. Expanding beyond places to stay. Will the payoff justify the investment? There's also maybe some concern about demand softening in the U.S., continued foreign exchange volatility, and of course the ever-present risk of regulatory changes impacting their business in different cities or countries.
Okay, so let me try and wrap this up for you listening. Airbnb in Q1 showed pretty solid growth, particularly impressive internationally. Cash flow remains incredibly strong, and they're actively returning cash via buybacks.
Right, but the headline profit numbers, net income especially, took a hit.
Exactly, and that seems largely due to them deliberately investing quite heavily in this upcoming summer release, this big push to expand their services beyond just accommodation, but their underlying profitability, adjusted EBITDA, still looks healthy.
Yeah, and what really stands out is that global story. Latin America, Asia Pacific, showing real fire. Plus, the move towards the app and focusing on those superhosts seems smart.
So as we finish up this deep dive on Airbnb's Q1, maybe the big question to leave you with is this. How might this expansion, this move beyond accommodation, actually reshape the wider travel industry?
Yeah, what new services could they realistically pull off, and what kind of roadblocks might they hit trying to become this, all-encompassing travel platform?
It definitely feels like we're looking at a company at a potential turning point, something to think about. Thanks for joining us for this deep dive.